What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 70. It's September 19th, 2023. We made some trades today, so let's get into it. So first and foremost, let's talk about the important levels that we have on the chart today. So we have yesterday's closing price represented by this purple line right here at 34,930. So let's go ahead and get right into it. So I came into the session this morning, did a little bit of pre-market analysis in the morning session, and I took some trades based off of that. So in the pre-market session, we were trending down pretty strongly. So once we got to the point where I took trade one, my idea right here was that the downtrend would continue and eventually come back down to test yesterday's closing price. So that was pretty much the idea that I was trying to employ throughout trades 1, 2, and 3. Now on trades 1, if we read the notes, it says, I shorted right here expecting for yesterday's closing price to get hit, but I shouldn't short the lows. And that's very important. That's one of my biggest rules. And you know what I learned today is that even when you have a good idea and you see the level that prices are pretty much not guaranteed to go to, but have a very good chance of going to, you might get excited a little bit and just jump in and say, okay, it's going there, so let me just get in. But you always want to remember that it's still important to make sure that you pick the best possible prices, because even though you have an urge to get in, if you short from the lows, more than likely the prices will pull back to a higher level of resistance like they did right here on trade one. They pulled all the way back up to what used to be a previous level of resistance maybe 2 levels ago. And then that's when the downtrend continued. So you want to make sure that even though you have an idea about where you want to see the market go, always get in at that best price. So after trade one gets stopped out, we see prices come back up to retest that level of resistance we talked about. And then we pull back down to where I took trade 2 from. Now on trade 2, I took this short once I saw prices actually break down below this level of support that this higher low created. Because when I'm in a downtrend, if I ever see a higher low, sometimes you can use the higher low strategy where you look to go long as prices come back to retest it. But if the downtrend is strong enough, what you want to do is see prices come back down to that support level, break through it, and then it should act as resistance, and then you short as prices get back up to it. So that was the idea that I should have used right here, but I kind of went along the same lines as trade number 2, where I just shorted way too low. And I pretty much shorted exactly at the lows for this entire swing right here. So that's not really what I'm trying to do. What I need to do instead is short from the level that makes sense. So in this scenario, the level that makes sense would be the resistance level now that was support before prices got broken through. So if I actually would have, let's zoom in. If I would have put my order right here at the level of resistance and shorted from there, my stop would have never been hit, and I would have been able to take prices all the way back down to yesterday's closing price without having to take that loss at trade number 2. So that's very important right there, to make sure no matter how strongly you feel about where the market is going, just make sure that you get in from the best possible prices. Don't just take whatever the market gives you. Take what you're looking for and reject everything else. So after trade 2 gets stopped out, I see prices come back down and actually break down through support once again. And now that level becomes resistance once again. So if we read the notes for trade 3, it says, I shorted here after waiting for a clear lower high to be established. And I think that's the most important thing. On 1 and 2, I was just kind of jumping ahead of the gun a little bit and trying to anticipate where the market was going based off an idea that I had, rather than having the idea and then waiting for the market to confirm it by giving me the signal that I want. So I finally got around to doing the right thing on trade 3, and I waited and I was patient. And then that's when the idea started to work. So that's very important right there. And that's a big lesson for me to learn, which is you can have a great idea, but you still got to have great executions when it comes to that trade. So trade 3, I just took it. I took the short from right here and then just took it back down to yesterday's closing price and then got out. And then I waited for the market to open before I wanted to trade anymore. So let's go ahead and jump to the market open right here at 9:30. Now in between trade 3 and the market opening, we see that the downtrend did continue and we created some major levels of support and resistance. So the first level that we're looking at is this lower level right around 34,000, let's call it 895. That was the lowest point for the swing up until that point at 8:45 this morning. So I just took a level, a trend line level, extended it across, and used that as a reference point as the market continued on. Now we eventually created this low right here, But at this point in time, I didn't really see the trading range that eventually got established. But once we came back when the market opened, wicked down past that level, but quickly snapped back and we closed right into the same zone that we were in. I was like, okay, interesting. So I saw prices come back up, retest this top level, come back down once more. And then once I saw that happen, that's when I could confirm that we definitely were in a trading range. And all I did to confirm that was I waited for 4 touches. So this was touch number 1, touch number 2, touch number 3. And then once we come up, that was touch number 4. Right before I took trade for it. Coincidence right there. So you need 4 touches in order for it to be a trading range. So you can kind of anticipate the 4th touch. You don't have to wait for that to be hit. So as soon as we see prices respect the range down here and then come back up to the top side of the range, all I did was just employ my trading range strategy. So when I'm in a trading range, if prices come back up and retest the top of it, all I want to do is wait for prices to make the first lower high. And as soon as they make that first lower high, I'm taking a short and I'm looking to hold it all the way back down to the extremes of that trading range. So that's pretty much the scenario that I ran into and the methodology that I used behind trade number 4. So I saw that prices created you could call this a level of resistance right here. And let's zoom in and actually talk about it because it's kind of debatable. You know, in terms of it being an actual swing low, technically it is, but you really have to study the wicks in order to understand why. So let's start from the bottom right here at this green candle. So we shot all the way up, came back to the top of the zone. As soon as we got back to the top of the range, we immediately got rejected and sold off. But we closed right near the closing price of the actual green candle that preceded that. We come over to the next candle, we sell off a little bit, but literally push back up to close not too far away from where the 2 previous candles closed at before. So that is more so a lower high because prices were not able to come back and break past the swing highs highest price. So even though it's a small lower high, it's a lower high nonetheless. So then we can draw our level of support on the lows of that swing low. And then once prices break through there, that level now becomes resistance. So all I did was wait for prices to come back up, retest this level right here, and then I shorted and took it back down to the bottom of the range. And that right there is my textbook trade, and that's exactly how my trading plan says that I should do it. So after that, I decided to call it a day because I felt like I did what I needed to. Ended up finishing the day in profit, so I'm happy about that. And you know, I felt confident about the trades I made. I felt good, so I wanted to keep that going and ride that momentum into tomorrow's trading session because we have the FOMC statement coming out tomorrow at 2 p.m. So we know it's going to be a very volatile session. So I just wanted to make sure I had a good mindset going into tomorrow. So overall, I would say today was a decent day. You know, it was good to make profits. I came back on trades 3 and 4 and made the right decisions. But I think on 1 and 2, those are the things that I got to clean up. Trades like that where I kind of have a feeling. Well, I kind of had a feeling when I took 1 and 2 that maybe I should be a little bit more patient. But it was something in me that just said, nah, Ty, take the trade anyway. Go ahead. That's the feeling that I got to avoid and the feeling that I have to fight. Because what I've been realizing is that when I sit back and I only take the trades that I've studied and the trades that make sense, I do pretty doggone well. I only start messing up when I start trying to anticipate things or trying to jump in front of the market and tell the market what it wants to do rather than letting the market tell me what it wants to do and then just following suit. So those are the things I got to clean up, those little mistakes like that and those little urges. And it just goes back to the video I made a couple weeks ago talking about how to avoid shorting the low and how to avoid buying a high. I pretty much did an analysis on myself and I realized that my biggest reason that I take these trades that I know I shouldn't is because I feel like I might miss out. But what I've also learned is that the counter to that idea and that way of thinking is to believe that there is an abundance of opportunity in the market, because there is. And if you truly believe that, okay, this trade is all right, but if I don't take it, it's going to be more to come along later in the day, then you won't feel obligated to take just any old trade. You'll wait for the best possible setups that you can find. And when you take those, you can actually be a lot more successful. So that's the biggest lesson I'm learning. And those are the main things I want to focus on tonight going into my back testing session. So that's pretty much all I got for you guys today. I hope you learned a lot about why you shouldn't short the lows, no matter how strong you think your idea might be or how strong you think a level might be down below. You still don't want to short near the lows. And on the flip side, you also don't want to buy it near the highs. And I also hope you guys learned a little bit about trading ranges, especially when it comes back up and tests the top. You want to make sure you wait for that first lower high to get established. Then you go short and look to hold it back down to the extremes of the range. So I hope you guys were able to learn a little bit about that, because I definitely did. Today is September 19th. I'll be back tomorrow on September the 20th at 9:30 a.m. ready to run it back. But until then, you guys, study hard and take it easy.